Welcome again, students. Today we want to talk about the objectives of accounting. We want to study about the objectives of accounting. Why do we do accounting? We do accounting to achieve these 6 objectives. We do accounting to achieve the 6 objectives. The first one is to provide information to users of accounting information so that they can make informed decisions. Number one is to provide information to users for rational decision making. We know that we don't just prepare financial statements for the sake of it in accounting. We prepare financial statements so that people who use the financial statements are able to make informed judgment. They are able to make informed judgments. They will use our actually three very important financial statements. Number one is called income statement. Number two is called statement of financial position, or balance sheet, statement of financial position or balance sheet. And number three, statement of cash flows. We prepare this financial statements to help users of financial statements who include the managers, the shareholders, the owners, the government, the financial analysts, the stakeholders, the community where the business is located, to give them information about the farm so they can make informed decisions about the farm. The government wants to know how much profit do we make so that it can the business can pay tax appropriately. The financial advisors want to advise their clients about the financial position of the farm. Number two, we prepare accounting. We do accounting for systematic recording of transactions. We want to maintain good transactions so that, for instance, you maintain an account for every one of your debtors, so that at the click of a button, you are able to know how much does each one of the debtors owe you. At the click of a button, you're able to know how much does each one of your creditors owe you. So we maintain systematic recording of transactions through accounting to help us to know the position for each one of those debtors or creditors. We also want to ascertain the financial performance. In accounting, financial performance is an assessment as to whether did we make profit or did we make a loss. How did we perform? How much were our sales? When we compare our sales with last year, how did we perform this year? How much profits did we make? Or did we make a loss? Financial performance is about profitability of the farm. Then we also want to know the financial position of the farm. What is the financial position of the farm? We want to know how much assets does the farm have, how many long-term or non-current assets does the farm have, how much of the current assets that the farm has, and how did we get the money to be able to acquire those assets? How do you get the money to be able to acquire those assets? So we get the assets, and then we get the sources of the funding. Where did we get the money to acquire the assets that we have? So that is the statement of financial position. We want to ascertain the financial position of the farm. We want to ascertain the financial position of the farm through accounting. We want to know the financial position of the farm through accounting. Number 5, we want to know the extent of the farm's solvency. What is solvency? Solvency is the ability to meet the maturing obligations as and when they mature. In other words, are we able to pay all the liabilities, both the short-term liabilities and the long-term liabilities, as and when they mature? Do we have the resources to ensure that we are not risking bankruptcy? We want to know the extent You want to know the solvency of the firm. You want to know the solvency of the firm, and the information that helps us to know the solvency of the firm is accounting information. And finally, we prepare accounting financial statements to help us ensure compliance with statutory requirements. There are very many laws that require companies to maintain proper books of accounts. One of them is the Companies Act. The Companies Act demands that every company must prepare the final the financial statements, the income statement, the balance sheet, the statement of cash flows, the notes to the accounts, and the statement of changes in equity. We are required to prepare all of them, and not just prepare, you are supposed also to file them with the registrar of companies. So the same thing with the Nairobi Stock Exchange. You cannot be allowed to operate within Nairobi Stock Exchange if you are not providing financial statements on a regular basis to update the users of the financial statements in the stock exchange. So those are the main objectives of accounting. Thank you very much. See you next time.